Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
That's been your traditional area of affection. Do you
It
think
remains so.
Okay, good. But is it a buy? Because we're seeing some global tremors because of trade wars.
Right. So our steel analyst Harshad Katkar is now doing steel, remains very positive. His view is that demand growth in India is fairly strong. And what we've really seen in China, the supply cutbacks that are continuing. So the combination of that should mean that steel prices stay steady for longer than they generally do. The question is what happens to demand, particularly in China, as fixed asset investment slows down and growth slows down. In addition, we have to also see what should happen in the new fiscal year, because steel prices have risen to almost 8- and 9-year highs. But we do remain positive on the sector. We like the sector.
Okay, you like the sector. Autos, last year, of course, we had a bit of a secular play. Maruti, TVS, everything doing well. The only play which has still been, doing well is CVs, Ashok Leyland. But what's your overall call on the auto space here?
So on autos, we like commercial vehicles the most. Our autos analyst, Ameen Pirani, believes that we are still 4 to 5% below the peak that you had seen in FY12, and therefore his expectation is that demand growth is set to remain strong. We have the BS6 norms coming up. That should be a driver for truck demand. We've got the state of UP and Rajasthan as well implementing this overloading very stringently. And of course the entire economy is recovering. We are yet to see the road freight rates improve. It's still in the range of 1 to 1.5%. But the fact of the matter is that if the entire economy is improving, commercial vehicle demand is only set to strengthen further. So we like CVs, we like tractors at this point in time. That's a ladder of preference.
Okay, I think the market is taking a bit of heart of what you're saying. It's getting a bit enthusiastic, and Nifty has recovered now, got into the green. Auto stocks are doing well, Bosch, Eicher Motors, Bajaj, etc. One of the stocks that you like, Abhay, is Titan. It's one of your preferred picks. In fact, incidentally, we do have the management joining us in a while from now as well. So I would request you to stay on and sort of chat with them. But I wanted to understand whether this whole jewelry scam has had any impact on demand at all. Titan says it hasn't. In fact, it's moved more to organized players. Is that your feeling as well? And do you see more value here?
That's in fact our conviction. That as a result, so you were already seeing an unorganized to organized transfer taking place, and after the events of the last few weeks, this transfer of market share towards organized sector players is in fact accelerating. We believe that this is a trend which has a long way to run. The organized players, including the company you just mentioned, are still a small percentage of the overall jewelry market in India. And therefore, there's a long runway of growth. This could very much be, a longer-term structural story from the levels where we are at.
Okay. I can't ask this question without taking the name of a specific stock, but you explain to us as best you can. I think you'll have a coverage both on GSPL and Gujarat Gas.
That is correct.
Now, today morning, GSPL has bought a further 28% stake in Gujarat Gas, taking their overall stake to 54. One interpretation, of course, is that GSPC, from whom they have bought it, is over-leveraged. And therefore, this is a parent relief-giving action. But nevertheless, it's a good asset they are buying, Gujarat Gas.
It is.
Any comments on this, on both the stocks?
So I will reserve comment on the stocks. What I will just say is that we remain extremely positive on gas as an investment story. And as our oil and gas analyst Harshad Katkar recently pointed out, December and January were months when gas prices rose. Traditionally, you've seen Indian imports of gas come off when gas prices rise and the differential between gas and fuel oil reduces. The differential reduced from 30% to 15%, but LNG imports actually rose. So clearly there is a very strong structural story over here. And this again brings us back to the thesis that gas demand would not be so strong if the industrial recovery was not gathering momentum. So that's how I'll answer your question. I won't be able to answer the question specifically on the companies.
Okay. Also, your thoughts on, of course, you may not want to comment on individual stocks, but, recently there's been a lot of developments about Binani Cement and, Ultratech, Dalmia, clearly in a bit of a race. And right now, the race is to be the top player. So thoughts on the cement space? Do you think everyone wins here, all the involved parties?
Clearly what we are seeing in the case of both steel and cement is that the stronger players are acquiring the capacities, and the stronger players are therefore getting stronger. So in the cement sector, for example, today the top 5 players would constitute about 60 to 65% of total capacity. And I think what investors must keep in mind in cement is that if demand growth goes back to the longer term trajectory of 8 to 9%, we could see industry capacity utilization rates rise towards the 80%. So between the expectation of a relatively more consolidated industry and a capacity utilization rate of 75 to 80%, I think that bodes structurally very well for the sector. So we are very enthused by what's really happening, as a result of the NCLT process.
All right, just before we go to Bhaskar, but I wanted to ask you, you said 11,500 is your Nifty target. What about the downside? How much lower do you think the Nifty could head in the near term?
Sanya, again, a very good question. In fact, this is exactly what we were talking about recently to clients. So clients are basically saying what could be the floor for the markets. So, if your valuation reverts back to your 10-year average of roughly about 16 times or so, and if you assume earnings growth of roughly about 20%, then around 9,400 becomes a floor for the markets. Now, markets always overshoot and undershoot, but the fundamental floor in our view, unless and until earnings are cut further, is about 9,400. That would be a fundamental floor.
And with that, we will invite a company that you love very much, the stock that you like very much, Titan. Found favor with you. It's among the top picks for Deutsche Bank and is their most favored pick in the consumer discretionary space. Bhaskar Bhatt, Managing Director, joins us now. Good morning, Mr. Bhatt. Thank you very much for joining us. Just give us the view from the ground on demand after recent events, the Nirav Modi issue. Has that impacted demand in any way, positive or negative?
Well, one-off events like these certainly have a temporary effect. But let me give you a picture of the overall trend. And that has remained secular in a way since demonetization. So demonetization, GST, and then the PMLA introduction, and then the withdrawal just before Diwali, etc. All these regulatory measures have all worked in favor of organized sector players like Titan in the jewelry industry. Not only that, the GST, which is a formalization of the economy, certainly has helped us overall as a company as well, because we operate, our competitors by and large are in the unorganized play, and therefore we benefit overall. Jewelry particularly is a question of migration. There was this suspicion about mixing poor quality diamonds, cheating on diamond quality, etc., which was all over in the news a few weeks back. It has created a sense of suspicion amongst consumers, but Tanishq with the Tata brand has always had the respect and regard of its consumers. Therefore, in a way, we have benefited even more.
Okay. By the way, the market is at the high point right now. Bhaskar, good morning. So now that the base effect is behind you, what kind of growth would you expect? Your last guidance was quite strong, but for FY19, what would be the overall target?
Well, first point is in the jewelry industry, we still are a very small market share player, and the size of the industry is very large. Now, even without the effects of the migration which I spoke about, we had been targeting a 10% market share, which is more than doubling our current market share in 5 years' time. Now, if that has to happen, you have to grow at least 20 to 25% annually every year. And we are confident of achieving that growth rate. Combined with that, the higher growth rate in studded jewelry is what we are targeting.
Okay, so that's about growth, but talking a little bit in depth about this migration to organized players, Mr. Bhatt, your margins in the business have been around 9 to 11% for many, many quarters now. Do you see accelerated pricing power because now there'll be this migration, and will that in a sense help you get better margins overall for the business?
We do see better pricing power for brand Tanishq. However, brand Tanishq is also pursuing a wedding strategy, which is primarily plain gold jewelry, and to that extent it is margin diluting. But the blended effect of higher growth in diamond jewelry and overall growth, which gets you benefits of scale, would add to the margin. It would add to the margin, but not as rapidly as people are expecting.
Okay.
I think the company's primary objective is to achieve growth in this window of opportunity.
Okay. Mr. Bhatt, your third quarter revenue numbers were, I think, 8% in the jewelry segment, and you guided for 25. You're getting there, 25?
We will get to overall, yes, 25% growth in the jewelry business for the year is definitely possible, and is going to happen. I'm taking a 4 quarters put together.
Okay. And what about watches? Are you seeing further traction? And of course, though the fast track and other accessories are a smaller part, if you can give us some idea of how things are evolving over there. Are you picking up traction?
Well, yes. Watches, as we have been talking to you, has gone through recrafting and therefore is now back on its original expected margin profile. The last 2 quarters have seen good margin improvement in watches, and that is thanks to not just cost reduction but improved product mix as well. So watches, the growth is smaller, but the margin growth is much higher. Okay. So watches is back into profitability.
Okay, that's good to hear. We'll come back for some final thoughts on your own business. But, just coming back to the point you made about the sector as a whole, the last time we spoke with you, you did say that the fallout of the scam has been a squeeze in terms of working capital. There's been a lot more scrutiny as far as bank lending is concerned to the jewelry sector. How are things looking now? I mean, has it gotten worse? Is it still harder to get access to funds, etc.?
It won't get better. I think very rightly, because of these malpractices that have been discovered, banks are going to be reluctant. Thankfully, it doesn't affect us because of our strong balance sheet. We don't have any borrowings, and our gold on lease, continues to fund our jewelry business. So, but the sector is certainly stressed.
Okay. Mr. Bhatt, your chairman has spoken about a general reorganization and a very big thrust on the consumer. You would be at the vanguard because you are their best performing consumer stock in the Tata fold. Are you seeing any, initiatives in terms of new products of other companies? I can't think of any, but is there some group leadership engendered thrust that might change your product mix?
Not really. Well, the chairman has articulated also about the One Tata philosophy, which is for all of us to work together even though we are individual companies with individual shareholders, individual boards and so on, but let's say the consumer, which some of us belong, to work together. And there are many areas in which we can work together. For example, negotiating better for property, on the buying side sometimes, on the consumer loyalty programs. So these are areas where companies are, while they're working individually, they are working with each other to get a bigger bang for the buck. There has been no mandate or thrust as such, but strategically I think we are on the right track.
Okay, Mr. Bhatt, thank you so much for joining us and taking us through the industry as well as what Titan could be, doing over the next few quarters. Abhay, you heard that conversation. Any final thoughts on the sector and the issues there?
I think Mr. Bhatt just reinforced our views and our conviction even more.
Okay, we'll take a break on that note. But when we return on the other side, Abhay, thanks so much for joining us.
Thank you for having me.
We will talk about the market technicals. You heard a lot about the fundamentals. Up next, Lawrence Balanco of CLSA will give us his view on the technicals.